Friends, this is Justin, and today we're gonna talk about stop loss, the importance of stop loss, and why do we have to set a stop loss in a market? Because stop loss is very important when we trade on intraday. Okay, because the market can turn anytime and it can come down. Okay, so if you set a stop loss, the values hit that stop loss, and your particular script exits from the market. Otherwise, the entire loss incurred on that day, you'll have to face the entire loss incurred on that day or when you come into the market again. So when you set a stop loss, you can trade with the confidence that even if the market goes down, your particular your particular stop loss will hit and you will come out from the market, so you won't incur a very big loss. Okay, and even if the market goes up, your profit, your exiting point profit will hit your profit, and it'll come out. Whether it can be a target 1, target 2, target 3 profit, it can come out. So this is a bit like like automatic trading. Okay, you set these values, and if the market goes up in a profit, it automatically trades, and if the market comes down, it automatically sells. Okay, going up and gaining profit, I've put it in my other video, so I'll mention the link below in the description, so you can go look at it, to how to exit the market with good profit and how to set your profit percentage. So now we are going to see stop loss, how to set the stop loss percentage, how to calculate stop loss percentage, and I'll show you one example for stop loss now. Okay, so I'm going with this strategy called open high strategy. Okay, so with this 5 minutes candlestick, so I've already I explained the strategy in my previous video, and I'll also attach that video's link, so that this is one entry point to enter into the market. Okay, very good entry point, very easy. You don't need any strategies or indicators or anything to enter using this particular strategy. Okay, next, how can we enter? So I'll enter using this open eye strategy. I'll enter, so I'll enter here, or I'll enter at this point, this open, I'll enter. Okay, after I enter, what will happen is I'm setting my target points. Okay, it can be target 1, target 2. For example, one sec, what if I set my target 1 here? Okay, and target 2 here, and target 3 here. Okay, so and the market goes up. Okay, at this point what happens is market goes up, the market reaches your first target, second target, third target, and it goes up beyond that also. Okay, so it's a good profit trade for you. But what if the market comes down? Okay, that's the reason we set this stop loss. Okay, so someone who's entering the market over here, the third target, you're entering the market. Okay, you're entering the market in the third target, so you'll have your stop loss is required for you, because here you won't get profit. The market is turning and coming down to a very great extent, so you won't even achieve your first profit over here. So that's why when we set the stop loss, we don't have to sit and look. So automatically, if one value is triggered, it'll automatically come out of the market. That can be a profit value or it can be a loss value. So you'll see. So I'm entering into the market here, and my target point is this. Okay, and I'm not setting any stop loss. So what happens is the market goes up, it didn't touch my target value, and the market turns and it comes down. Okay, what if I had set a stop loss? Or what if I had set a stop loss? I can set it at this low. Okay, I'll set it at this particular low. This is one of the stop loss. Okay, so you can calculate stop loss, you can using percentage also, which I'll show you later. But now this it'll be, I'll show it in the later part of the video. But now for an example, I'm just telling you the main reason, the importance of stop losses. Okay, if I set a stop loss here, so you can be confident, like you're entering the market here, if it goes up, you'll achieve a profit of so much, and if the market turns and if the market comes down, it'll just hit the stop loss. Okay, hit the stop loss, and you'll come off the market. And after that, look at the market, it has gone down to a very great extent, like 133.41, but you have entered the market where at 138, so whereas 133 and 138, such a huge loss. Okay, so all the profits which are made in 1 week will go off in 1 day. That's how it works, that's how it is. So what if you set a stop loss? You could have come out with a decent loss. okay, and you need not worry and think about it always. Okay, think about it, you can concentrate on your other works and other stuff, so that because this will take care of it, your scripts and the entry points which are giving now will be pending, and once if it's triggered, it will execute and it will process your script. Either it can be a profit or a loss with decent profit and decent loss. Okay, and this is how we calculate our stop loss. So this is profit booking, exiting the market and exiting the market. So profit booking, entry, exiting values. Okay, so this I have mentioned the previous values I have already told you, which is 0.3%, 0.5, 0.7, 1%, all this, and you can set it as your profit booking percentage to exit the market. Okay, you can set all these percentage and exit the market. Okay, now to set a stop loss, so if you are setting your target point as 0.3%, suppose you are taking this point as your profit percentage, so then just target percentage, then your stop loss can be 0.6%. okay, so it is in the ratio 1:2. 1% is your profit, 2% can be your stop loss. So that is I mentioned in this ratio 0.3 is to 0.6, like this. Okay, this is one of the best stop loss percentage, because this will not give you a lot of loss and lot of profit. This is like even. And the second example is for 0.5% profit, and your stop loss will be 1%. okay, so 1% below that. For the example for that is, suppose you're entering a trade for 184.9 is your buy value, and you sell your sell price at, this is 0.3% profit of 184.65. you put your sell entry of so much, and you put your stop loss at 182.99. so if the market goes up and touches this, it'll book a profit of so much, or else if the market comes down, you'll exit and you'll book a small loss of so much. This is being on a safer side, safer trading. Okay, this is how you can trade with percentage profit is a calculated stop loss. And people who are trading with candlesticks can just take the previous candle's low, they can also do that particular trick. They can take the previous candle's low as the stop loss. Okay, as I've showed you before. Okay, I'll show you another script. This is a calculated trading which you can follow this, and you can follow the other one also, the previous candle's low. Okay, and we have seen for ONGC. Now I'll show you another script which is JSW Steel. Okay, for example, we are entering the market here. Strategy, I'm entering the market using OH, open high strategy with, okay, I'm sorry, okay, with 30 minutes. Okay, 30 minutes candlestick. Okay, even this can be used for 30 minutes candlestick also. OH, I'll upload another video which is based on this 30 minutes candlestick and how you can trade with this 30 minutes candlesticks, and all the benefits and drawbacks between 5 minutes and 30 minutes. We'll see that later. Now stop loss, looking at stop loss, this is my entry point. Where's my exit point? Like this can be target 1, this can be target 2, this can be target 3. Okay, 3 entry points I have put. Okay, and you can enter in the market, where you can exit from the market wherever you want, depending upon the risk percentage. So this is for a safe trader. Target 1 is for the safe trader, medium traders and risky traders. This is how it works. And there's not a big complication in this. So, and now I'll tell you the stop loss. Okay, I'll set my stop loss here, low of the previous candle. So once this, if the market turns down and the market comes down, it will hit this particular stop loss point, and the market you'll be on a safer side with a safer loss. You wouldn't incur a very great loss. Okay, it's a decent loss for you if the market comes down, I'm telling you. Okay, so you can set this, or you can calculate my 0.6% stop loss for 0.6% and 0.3% as your profit percentage, and you can trade using that also. Okay, you can do that method, or you can follow this method also. Both are safe, but stop loss is a very important concept which we must follow. And according for I'm explaining this because of my experience, what I've faced, since I've never applied stop loss, the concept of stop loss, because I never had anybody to explain all this. Okay, so after I learned, okay, I experienced it and I learned, and after that I wanted all of y'all to know. Okay, so that's why I'm explaining it in such a detailed manner and very slowly. Okay, and this is for all the new traders out there, and for the experienced traders who know about this, it's well and good, and for people who are still trading without any stop loss, please do apply the concept of stop loss in your trading procedures. Okay, like buying and selling, stop loss is one of the very important concepts over there. Okay, thank you. Please do like this video and subscribe to this channel and share it to your friends, so that it might be useful for people who are facing losses, and it can make them gain profits. Okay, so thank you very much for watching this video.